Hello, everybody, and welcome to Biyond. This week, I'm going to be looking at something different. I'm going to be looking at our Vanguard 2.0 model. But before I do that, I'm just going to read through this disclaimer, so please feel free to read along as well. Biyond Trader LLC is strictly a research publishing firm. The information we publish is based on our opinions, plus our quantitative models, statistical and financial data, and independent research. This service is not registered with any financial regulatory agency, such as the SEC or any other organization or governmental body. By using our platform or our services, you acknowledge that we do not provide personalized recommendation or advice. Alternative asset classes are volatile investments and carry significant risk. Please do your own research before making any financial decisions. So, as I said at the start of the video, I'm going to be having a look at something a bit different this week. I know that normally we go through the platform and we look at what our key quant models are saying. But as you can all imagine, with this latest crypto market crash, things are looking pretty bearish across all of our indicators. So I thought this week I'd start to look at something a little bit different, and hopefully it can put some perspective into the market. So before I go to the 3-day chart, I think a great picture of the market at the moment is on a very high level, and I'm just going to briefly talk through exactly what I'm seeing on our model. So I want to start off by saying that our Vanguard 2.0 model is slightly different from the 1.0 model on the website, in that it actually looks at the real-time activity that's going on in Vanguard. So the actual one on the website, the 1.0, you can't see the closing candles until they've closed. But on this model, the Vanguard 2.0, which you can come to our website and purchase, it actually allows you to see the color changes in real time. Although the best way to utilize it is for the actual color change to happen itself and confirmed by the candle close. Some people like to see them happening in real time, and it can also give you a heads up if there's some serious momentum in the market. So I just wanted to give you a little bit of a brief overlay of that. So our key indicator here that we're looking at, Vanguard, it's on a weekly time frame. And as you can see, we've got here all of this recent down move has been captured by orange and red. So orange is letting you know a bit of a warning sign that things are still pretty bad, and the red is obviously telling you to exit the market and either short it or just stay put, or whatever your investment strategy is. So we know that things have been bad, and recently, since November, the market has been in a period of slight upward price consolidation. It failed at the yearly pivot point and got rejected pretty hard, and now we're seeing the second weekly candle here on Vanguard 2.0 in red, and it's letting us know that things are pretty bad. But it doesn't mean that it's game over. But what it is certainly suggesting is that what we're seeing now in terms of this down move is very, very similar, not only in structure, but what happened with Vanguard during the down move in the last bear market. So you can see almost exactly the same sequence. Orange is letting you know the warning sign, then red, big drop off, and then some more red. And we've got this consolidation, which has been happening mostly between orange, but also some red. And then we've got the big down move. So this awfully looks like what's happening now. And this is one reason to stay away from the market yet, because it's kind of suggesting that what we might see is another significant drop lower, then some pretty heavy price consolidation going sideways before the market makes its mind up. So if I were to look at this technically, which I try to avoid because on a Sunday we just want to go through our indicators, but I also want to kind of build into our indicator theory here as well, if you'll allow me to do this. So in previous markets that start to turn bearish, what we typically see is that after it's been confirmed that the cycle is kind of ending, we move back towards the former cycle high, and that kind of acts as a support area. And we can see here that's what happened in the previous market, and we somewhat slip inside there, and that's kind of the deep value proposition. So I want to kind of present a theory today, as Vanguard is obviously still very bearish and looking like it's headed lower. If you go onto our website, we have the yearly pivot points for all different cryptocurrencies, and Bitcoin's a yearly pivot point is at 96,000. As I said at the start of the webinar, we got a strong rejection from there. And after you get a rejection or move above the pivot, you can just move towards the S1 of the year, which is a support one, or you can move towards the R1, which is the upward form of resistance for the year. That's been calculated according to the pivot. So if we are to move according to what the pivots are saying, then the S1 for the year is located around about the 66,000 level. Bear in mind my comments about we moving towards the previous cycle highs. So that certainly seems to be aligning, and our indicators, like I say, Atlas at the moment, not looking good at all. Vanguard looking particularly bearish. So this is our base case scenario at the moment, kind of move down to that area, anywhere between 66 and probably 52. Is a good area to look for this to start to bottom out. However, I will say that, there is a caveat there. We haven't completely broken underneath, as bearish as everything is in terms of what I've outlined so far. We haven't broken underneath this structure here. So there is certainly a bit of a case that if we don't break underneath there, and for whatever reason, the market doesn't close the weekly candle underneath the 80,000 level, then it's certainly possible that the market could be carving out a huge range. However unlikely that seems at the moment. But, that's certainly the second and more unlikely scenario that we're seeing. But as I said at the start of the webinar, things really do not look good across the weekly time frame for Vanguard, and also the 3-day. After seeing some mild blue show up as we tested the pivot point, we've certainly seen a bit of a price crash here. So overall, things don't look great, so I would be expecting a move down towards the 66,000 area. But again, that's kind of the base case scenario. But, until we break underneath that kind of structure around 73,500, then that kind of opens up the doors for more losses. So that's what we're looking at the week ahead. And I think next week we'll return back to the platform. But I just wanted to do something out of the norm this week, as I would say that Vanguard looks like it's closely copying in terms of coloration and also structure what it did in the previous bear cycle. So hope you enjoyed that, and I'll see you again next week.